Next up, we have Anglo American. It's a global mining company. Its portfolio includes iron ore, manganese, metallurgical coal, base metals including copper, nickel, and precious metals, and minerals including platinum and diamonds. It has a market cap of 248 billion rand, a PE ratio of 13.8, and a dividend yield of 6.2%. That's obviously historical, based on current prices. I mean, that market cap of 280 billion rand, it's come down heavily. I mean, what was all-time highs of the share price? About 550 rand?
Somewhere up there, yeah. A little, not so long ago. Yeah, so
are you in the value camp with Piet Viljoen and the RCM boys who think that this is a buying opportunity of a lifetime?
No, I don't think so. I mean, if you look at Anglo, it's too much a function of what's happening to the commodity prices, and that whole story of how as the Chinese commodity demand increased and the commodity prices started to pick up. I mean, the amount of investment that all these diversified miners did in capacity. I mean, you saw Anglo piling into Minas Rio, massive iron ore project there, and I mean, really expanding capacity. Now suddenly, you're starting to see the Chinese economy cooling off, and you've almost got a double whammy. You're getting a slightly softer demand, but you're getting a massive increase in supply. So I mean, if we're looking specifically at, I suppose, their more luxury goods side, so the De Beers side, the diamonds we're a huge fan of. I mean, they're doing probably the crown jewels, so to speak, of the Anglo stable. But I mean, unless platinum's recovering, I mean, we still see a lot of headwinds there. I mean, the whole iron ore story is also, it's a very, very difficult position for the company at the moment. So we are steering clear. We don't hold Anglo American as a basket. If I could strip out De Beers specifically and just take their diamond operations, I think I would do that. I mean, there's another great rand hedge. I mean, they sell these diamonds in dollars. Most of their costs are in weakening currencies, especially with the dollar run that we've had. Yeah, and just very, very solid operational company. I mean, increasing, production levels, I think 5% as well. And, they've now also sort of diversified out of South Africa. I mean, they've got two mines up in Canada as well. So I think the De Beers portion of it, very, very exciting, but the rest sort of dragging it down a little bit for me.
I agree with you. I think when you had a look at that share price, you can see the market's not happy with those strategic decisions, big write-downs in Brazil, but sticking to our theme, De Beers is definitely a quality asset. I think they own about 85%. The Botswana government owns another 15%. So that was also a very well-timed acquisition from the Oppenheimer family. But overall, you're not just buying De Beers. You're getting the rest. You're getting the issues of supply and demand. Where's the next infrastructure boom going to come from? Is it India? We don't know yet. I agree with you. I think it's a bit volatile, and I'm certainly not hot on the overall business. Are you hot?
No, definitely not hot on Anglo.
Not hot on Anglo.